Hi, I am Soumya Jain. Welcome to Weekly Economic Insights, where we discuss the latest news and updates that affect your personal finances. In today's segment, we'll begin with an expert's view on the increasing popularity of gold ETFs. More people are investing in gold exchange traded funds. In August, investors added a record 1,611 crore rupees to these funds. This is the fourth month in a row that money has flowed into gold ETFs. Now, the total value of gold ETFs in India is 37,390 crore rupees. Gold prices stayed between 69,000 and 72,000 rupees for 10 grams last month. The government lowered the tax on gold, which kept prices down. Around the world, gold ETFs are also getting more money. Let's hear what our expert Yogita Dand, CFP founder at Svarasa, has to say.
So as per our view, this reflects a growing interest in gold as a safe haven, which is driven by the rising gold prices and market volatility. This basically means that investors are now viewing gold as a hedge against inflation and economic uncertainty, obviously because of the wars that are going on in the Middle East, etc. And this has contributed to the inflows into these funds. Also, the fear of recession in the US is triggering this inflows into the gold ETFs. So there are several personal finance considerations, especially around the tax implications of investing in gold ETFs compared to the other gold-related options such as physical gold or gold futures. The tax structure for gold ETFs has recently become very, very favorable because of the budget, aligning it with the taxation on physical gold. So gains from gold ETFs held over 12 months are now subject to a long-term capital gain tax of 12.5% down from 20% without indexation benefits. So this simplification has made gold ETFs more attractive, especially for the high-income investors who previously faced slab-based taxation on gains from gold investments. Also, compared to physical gold, which has a similar tax treatment after gold 24 months, gold ETFs have this added advantage of easier liquidity and storage. Hence, it is a more convenient way of investing. So vis-a-vis gold ETFs, the LTC long-term capital gain tax on physical gold is 12.5% after 24 months. However, physical gold can also involve higher transaction and storage costs, which reduces its appeal for long-term investors. With regards to gold futures, they offer a leverage exposure to gold prices but are taxed differently. Short-term gains are added to the investor's income and taxed according to the income slab. Futures can also be riskier because of their speculative nature, hence making them less ideal for conservative investors. Currently, we wouldn't comment on sovereign gold bonds. They were very, very tax efficient, of course, whereas while the interest earned on sovereign gold bonds was taxable, the long-term capital gain tax was exempt if the bonds were held till maturity. However, as of right now, there is no sign of sovereign gold bonds being released by the government. So this is our take on the inflows and gold ETFs, and we feel that it is a positive sign because as financial planners, we definitely recommend at least 10% of investment in gold as a hedge against inflation and other adverse effects, other adverse situations in the world.
Thanks for sharing your thoughts. Let's look at how gold jewelry sales are doing. People who sell gold jewelry in India expect to sell 22 to 25% more this year. This big increase is because the government lowered the tax on gold. The sudden price drop might cause some problems for sellers, but more people buying will help balance this out. Companies won't need to spend as much on ads. Lower gold prices will help jewelry companies manage their money better. They plan to open 12 to 14% more stores this year. This change could make it easier for Indians to buy gold at lower prices, making it an attractive investment option. Now let's see what's happening with electric vehicles in India. The Indian government has a new plan called PM E-Drive. They will spend 10,900 crore rupees to support electric vehicles over the next 2 years. This plan will help people buy electric two-wheelers, three-wheelers and buses. A big part of the money, 4,391 crore rupees, will help buy 14,028 electric buses. The plan will also help buy 2.48 million electric two-wheelers and 3,16,000 electric three-wheelers. For the first time, electric trucks and special ambulance are part of the plan. The government will spend 2,000 crore rupees to set up over 70,000 fast chargers in cities where electric vehicles are popular. They will use special vouchers linked to Aadhaar to give benefits. This could make electric vehicles cheaper and help more people buy them. Moving on to a study about Indians sending their children abroad for education. A new study by HSBC shows that 78% of well-off Indian parents want to send their kids to study in other countries, but only 53% have made plans to save money for this. Studying abroad is very expensive. It can use up to 64% of these parents' retirement saving. Still, 90% of these parents say they want to pay for their child's education in another country. By 2025, over 2 million Indian students might study abroad. To pay for this, 40% of parents think their kid will need to borrow money. About 51% hope their children will get scholarships. Some parents, about 27%, are even ready to sell what they own to pay for their child's education. The study also found that 60% of Indians plan to keep working even after they retire. Let's look at what's happening with oil prices and how it might affect us. Oil prices around the world have gone down to about $70 for a barrel. This is the lowest price in 3 years. Prices are low because fewer people are buying oil and more oil is being made. This drop is affecting oil company stocks in India. ONGC's stock value has gone down by over 15% in the last month. Oil India stock dropped by more than 14% in just 5 days. Indian oil companies' stock also went down by 4.5%. This might mean oil companies will make less money, which could make their stock worth less. Because oil prices are low, India is thinking about making petrol and diesel cheaper. The government last made fuel cheaper by 2 rupees per litre before the election in March 2024. If they cut prices again, it could make transportation less expensive. This might also help keep other prices from going up too much. But the Finance Ministry hasn't said anything official about this yet. Now let's see how the government is planning to help older people with healthcare. The Indian government has decided to give free health insurance to everyone who is 70 years old or older. This will be a part of the Ayushman Bharat plan. About 4.5 crore families with 6 crore older people will get this help. Each family will get free health cover worth 5 lakh rupees. Older people who already have this insurance will get an extra 5 lakh rupees cover just for themselves. People who have other government health plans can choose to keep their current plan or switch to this new one. This change could help older people and their families save money on healthcare. The Ayushman Bharat plan is already one of the biggest health insurance programs in the world. It covers 55 crore people and has helped with over 7.37 crore hospital visits so far. Finally, let's move on to what the RBI says about the credit card spending. The Reserve Bank of India says that people spend 19% more on credit cards this July than the last year. The total spending was 1.73 lakh crore rupees. Experts say this because more people are using credit cards. They can now use credit cards with UPI too. Most of this money, about 1.11 lakh crore rupees, was spent on online shopping. People also spent 25% more in stores using credit cards compared to the last year. HDFC Bank's credit card were used the most, with 44,369 crore rupees spent in July. There are now 10.46 crore credit cards in India. Experts believe that the growing use of digital payment and credit cards will continue to drive spending, making financial services more accessible to a larger population. That's a wrap for this week's Economic Insights. We've explored major shifts across various sectors, reminding us just how dynamic the financial landscape can be. Stay informed to navigate these changes and make informed decisions about your financial future.